Good evening, everyone. Welcome to Admiral Markets webinar. My name is Chris, and together with me, Nenad and I are going to take a look at basically the impact on the Forex, CFD, and financial markets with the new U.S. President-elect, Mr. Trump. So that is our focus. What will Trump basically do in the upcoming days, weeks, months, years, and how is that going to impact Forex trading and the financial markets in general? Before we dive into today's topic though, please be aware that this webinar and later on recording is shown to a global audience and may not be suitable for everyone. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more information on that. Also, please be aware that trading for exchange of global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thank you so much. Nenad, right here in this picture. Chris, that's me. We together are going to take a look at what happened in the U.S. politics. What kind of impact is that going to have short and long term? First of all, let's get cracking right away with the political landscape. On Monday, Nenad and I were talking about the percentages, and there was basically, we're indicating a 15 to 35% chance of Trump winning. 65, 85 for Clinton. Trump clinched the win, beating the odds there. Of course, for those that, for instance, play poker or do anything with statistics, you know that 35% chance is a lot. That's 1 in 3 chances. So that is definitely a pretty high chance. And, you know, for those, there's basically two sentiments, I guess, here. One side thinking that Trump could never win, and the other, of course, hoping that Trump will pull off, let's say, the stunt. And why do I say stunt or stunt? The mini surprise, maybe, depending how you look at it. But why do I say that? Because the polls were in favor of Clinton. And the electoral map was in favor of Clinton, according to the pollsters, according to the ones that look at the polls and study the polls and know what the polls are about. So the polls didn't reflect the anti-establishment, the let's say, politics as usual vibe that was going through the U.S. All right, that's basically what happened. Now, the Senate went Republican and the House went Republican. We had two predictions. We said, well, either it's going to be a very close presidential election and the Republicans are going to win both, or the opposite. You know, we will have that, obviously, the potential for there are 60% chance for the Democrats to win the Senate, because they had a good chance to win the Senate because a lot of Republicans were up for re-election this time around. That will be different 2 years from now when a lot of Democrats are up for, defending their post. All right, so that's why they had a good chance. They failed. They missed the goalpost. And, you know, whatever you look at it, it was a failure this time around for the Democratic Party. Now, with that said, we have to also keep in mind, all right, that it was close, right? Trump and the Republicans clinched to win, but according to the last votes I saw, Hillary Clinton did win the popular vote. Ironically, that's the second time in 16 years. The last time that happened was in 2000 when Al Gore won the popular vote but lost the electoral vote college and Bush was president. All right, so it was close, especially if you look at states like Pennsylvania and Wisconsin, where the difference was like 1%, I believe. So yeah, basically what happened though, the reason why Clinton even lost Pennsylvania and Wisconsin, which was absolutely not expected by the pundits, the reason for that, all right, was this massive shift, the alliance that the Democrats had, let's say with the blue-collar workers there in these Rust Belt states, the Midwest, going from Michigan to Wisconsin, Iowa, Pennsylvania, Ohio, was the unsatisfaction, the dissatisfaction of the blue collar with the elite, with the fact that industrial jobs were shipped away in the last 30 years, moved away in the last 30 years, and you can see it on the right. Look at this. This is basically showing the shift compared to Romney 4 years ago and the Trump now indicating the bigger the red arrow, the more the shift was. And you can see where those red arrows are heavily located. All right, that's all there in that Midwestern region, even in Minnesota, even in a state like Minnesota, that was democratically voting. I think the last time they voted Republican was maybe for Reagan the first time. No, not even for Reagan the first time. I think you're going back like decades at least. I don't want to dive into details, but really, really long. And that was just barely held Democratic. So it is really this region right in here, all right, right there in that Midwest that swung it for Trump. That's where the win was. He also won North Carolina and Florida. Clinton won the swing states of Nevada, North Hampshire. She just managed to hold it, and Colorado. All right, so still a few votes out there still remaining, I guess, somehow because of the voting. Let's take a look a bit, just very quickly here at the map again. You can see here, this on the left shows, to a certain degree, one of these. On the right, let me explain. The right shows all kind of demographics of who voted which way. All right, there are a lot of ways of looking at it. This is only part of it. On the left, you see kind of a zoomed-in version of basically white non-college voters. And look at that. Look at that shift. Look at those red arrows. All right, right in that zone again. Let's take a look quickly at the blue versus red. Blue Clinton, red Trump. And you're going to see some differences here. Obviously, I guess, in a certain degree, obviously, perhaps for pundits that look at this, females voting a bit more for Clinton, but maybe not with the margin they expected, 54-42. Males, 41-53. All right, 41-53. There's a gap of 12 in favor of Trump for the men, gap of 8 in favor of Clinton with the females. All right. There's that racial division there that you can see pretty clearly. The age too, by the way, because young voters more leaning blue, older voters leaning red. We saw that with Brexit as well, by the way. So is there a generational gap? Is there a generational view difference in how people see maybe globalization, the establishment, whatever? It could be there. Some of these stats are pointing to that, all right? Education, yeah, you can see that there's a slight uptick there. The further the education is, postgraduate, the lowest, most blue. And then we go at income is pretty well, I would say, across the board about the same with some minor swings there. So that's to give you some idea. You can dive into all these details you want. Let's go further and talk about Trump now. He is the president-elect, all right? The inauguration is going to take place in January 20, I think, 2017. Barack Obama will stay president until that moment. There will be some transition, of course. I believe that today, now or later, soon, Obama will speak with Trump, and you're going to have that transition period. But officially, the inauguration is in January. So what is going to happen? The plans and decisions. Trump mentioned some plans, of course, in his in the media, in his press conferences, his rallies, and that's the material we're going to have to be using for those plans. All right, he has not served as previously in government or in the military, which is the first, actually a first for the U.S. Political scene. So he's talked about money out of politics. Is he going to, remove basically the laws that allow money to flow into politics? Is he going to tackle lobbyists? Time will tell. I don't know. I have no clue, to be honest, but we will see. All right. Time will show if he's going to remove that. If he does, that could restore, I would say, some faith in certain institutions, political institutions in the U.S., which are at historical lows at this moment. If you look at the stats, if you look at the views, they are quite low. So let's see if that happens. What I think looks pretty certain that he will do is repeal Obamacare. And he's going to replace it, he said. He's going to repeal some regulations that Obama does. He's going to fill in that Supreme Court vacancy that has been open for a year, Republicans blocking Obama's nominee. He apparently wants to boost oil and gas domestic production. All right, so he's going to focus on the traditional, let's say, fossil fuel energy sources. He wants to improve the economies. He's going to be focused heavily on the economy and infrastructure spending. Is he going to build that wall between the U.S. and Mexico border? I don't know. We'll have to see. And he's talked a lot about trade deals and trade negotiations. All right, so these are the focuses. What is he going to prioritize? What is he going to do right away? Time will tell. I don't think it's clear yet. As far as I can tell, I do think that one of the things that is going to be done first is probably repealing some of these regulations, doing Obamacare and Supreme Court. All right. So what kind of consequences would all of these things have? Well, Trump basically has a working government. So he has Republicans on his side. Senate with 51 at the moment, maybe a bit more later on. That means that he can push through his plans. But don't forget, let's not forget all of the politics before that. Republicans, I think, will follow the leader, let me say it this way, but I think there are some natural borders that they might want to disagree with Trump. Now, where and on which issues, we'll have to see this political dynamics as it plays out. But don't forget that there was some struggle in the Republican primaries and within the Republican Party as well in accepting Trump as their candidate. So there could be some frictions, perhaps, little frictions. We don't know. Time will tell. At this moment, there are protests in the streets, just like, there was a heavy division when Obama was president. There seems to be a pretty strong political divide in the U.S. in many ways, and that's going to make it not easy to unify a country in certain ways within this political atmosphere. We already talked about it on Monday. However, that said, first 100 days is going to be kind of the usual honeymoon period. That's the typical standard time that every president gets, 100 days. Basically, media is not going to overly criticize or maybe perhaps avoid most of the criticism in those times as a kind of grace period to show and give a chance for the new president to show what their plans or his or her plans are. So now that has been his. All right, so regarding the Republican Party, they're in the saddle at the moment. They can make the direction of the country. The Democrats, well, they lost. They lost against an outsider of the politics. Their strategy failed. That's the simple conclusion. I guess you can find, many, maybe, let's say, excuses or many reasons. Ultimately, right, if we have to make a final decision, well, strategy didn't work, whatever they chose. So, but the main question, I think, for the Democrats will be, will they learn the correct lesson here? Will they understand that the political kind of dimensions have changed and politics, insider politics, is maybe not the way to go? All right, so that's the big question there. Let's see. So, let's put it in context, okay? Because that's just the election so far. But if we put it in a bigger scope, I think that we are looking at a global trend here of political in versus outsiders. We are seeing that across the board. We saw it with Brexit, I think. We are seeing it in some countries of Europe. I think we're seeing a struggle or a back and forth between conservatism and liberalism. We're seeing that also even with governing styles, right? How do you, as a people, choose to govern one's nation? So there's, I think, there's there's also the question of freedom in the sense that surveillance society, the monitoring of technologies and stuff. So there are a lot of trends here going on that are interplaying, interacting, developing, and this is a kind of a dynamic period of time at this moment with all these trends going on. All right, so that's one thing. Then we have basically U.S.'s geopolitical involvement. All right, from a geopolitical point of view, this is, leaders do not matter. Geopolitics looks at basically very, very long-term trends. So strictly speaking, geopoliticians would not even look at leaders because they look at the country's natural resources and abilities, etc. All right, but we can also use it in a more short-term, looser way. All right, and Trump has already indicated that he is not as maybe as involved with the world, perhaps, as maybe other presidents would have been, or maybe as Clinton would have been. I say maybe because he has not been in any office before that. So we'll have to see really how those things develop. All right. But that has been kind of the vibe that he's trying to, I think, send out, which to a certain degree, I think, has been therefore warmly recepted or welcomed by Russia and China, that part. Russia, because I think they would like to have a bit more space and not be maybe, let's say, intertwined or bothered by the U.S. perhaps. Same for China with their maybe their kind of, their way of looking at the U.S. that they see it as maybe intervening with their geopolitical goals. All right, so that I think was one of the reasons why Russia and China were pretty quick to congratulate Trump, etc. Now, Europe was, I think, less pleased. Germany even added a statement that we are looking to work with Trump, but only under these conditions. They felt needed to add the conditions there. So, there was already some skepticism there, I guess, if they needed to do that. Trump has already indicated that the Iran deal will be broken up. So that has some consequences for Iran and the Middle East in general. So we're going to have to see and monitor that too. Let's not dive into that all too long, though, because I got some more slides. Energy security. Basically, Trump wants to boost oil and gas production. So that means oil price maybe under fire here, more energy independence from the U.S. That could also have some impacts on international alliances and geopolitics too. And last but not least, how is Trump going to follow up on his promise to get jobs back, to renegotiate trade deals, to be tough on trade, tough on TPP and perhaps TTIP? So is indeed TPP, is that indeed over? Is he going to renegotiate that, or is it a done deal and it's not going to happen? Question mark, right? How is China going to react if trade tariffs are implemented? Is he going to implement trade tariffs? Is China going to retaliate? That could spiral into a trade war there. I don't think that would benefit anyone, I guess, from my opinion. But those are kind of the factors, questions, things, developments to keep an eye on. Of course, if Trump would do that, China would be less pleased. And I think that would be not a good development from their point of view. So there's a bit of a mixture here. Here are some things they might like, some things they might not like. So fiscal, economic, tax policy impact. Well, it looks like Trump wants to invest in infrastructure, do tax cuts. We do think that this will lead to economic growth in the short term, will push inflation probably. And I think once inflation starts to rise, this will give kind of and unemployment stays at where it is or maybe slightly ticks down, then I think we see that the Fed will kind of sigh a relief there and finally have the signal to raise rates as they've been thinking about for years. And there could be a slight, let's say, normalization, a path of rate hikes that could go to, let's say, the long-term average. So that could happen. That could, of course, fuel that USD strength that we've been talking about as well. And we can see that continuation there. So, with regard to, that's the short term though. Let's take a look a bit like the medium term. Depending, of course, how Trump impacts the markets there, impacts the trade and the globalization, how stringent, how tough is he going to be on that development? Will there be a backlash on that? Will there be, countermeasures taken? Will we see more isolationist policies? All right. This will shift the economics and it could hurt GDP, globally speaking. All right. Is there going to be more debt? I mean, these policies will probably lead, according to the estimates, to a bigger debt, 2 trillion debt. Most likely that's already including the extra economic growth. So the debt will actually increase more than 2 trillion. But if you take into account that debt will generate economic growth, then if you take a look at those revised numbers, then 2 trillion is probably the debt that's being raised. Who knows? It could be more, it could be less, whatever it is. Is it too much? Will the debt be a burden for the long-term economic growth? Not talking about short-term, but long-term economic growth. According to theory, or what I've read about debt is that works well if there's low levels of debt. Adding debt definitely stimulates the economy, but the rate of debt, the rate of return on debt, I should say, is diminishing and ever increasingly diminishing. So eventually, when you get to a high debt, if you add a bit of debt, the impact is really decreasing strongly after that. So that's why I'm wondering what could happen. I don't know if there is going to be a debt. Maybe somehow Trump is going to balance the budget more than we expect. That remains to be seen. At this moment, according to his own plans, there's going to be some debt increase, more debt than with Clinton. How is that going to impact that long-term economic growth? Are there going to be any asset bubbles appearing with that? So that remains, because that debt could fuel certain asset classes in the next few years, and that might not burst right away, but maybe somewhere in that medium term it could burst, and that could be quick, right? Just look at the real estate bubble in 2008. And how about the emerging market weakness? Emerging markets, there could be some lack of growth there. How is that going to respond to the U.S. debt strengthening? So a lot of question marks there. We're going to have to see how those, the next days and months, how those things respond. But based on this, we're going to show you soon the chart what we expect price to do based on these trends, all right? But first of all, before we do that, this is, we talked a lot about a lot of angles here, but I want to get Nenad's 2 cents on some of these things as well. So first of all, hi Nenad, how are you doing?
Hi Chris, excellent. Yeah, actually this was a great day for trading, and we have seen a lot of movement in Forex market and equities. So I think that, for me at least, this is this week has been great for profits. So actually, after this U.S. elections, I like the volatility at the present much better than it was like 3-4 weeks ago. So yeah, a lot of movement, clear trends on some pairs. So yeah, just from trading perspective, this is actually very, very good at this point.
And before we dive into the charts, I was thinking, how do you see basically, let's say the Trump administration, what do you think will be the most important parts of his plan? Is it possible to guess that already, or do you think that we'll have to see?
I really think that we need to wait and see. Trump was saying a lot of things during his presidential campaign, but from our experience, we know that some things that are said during the campaign simply are not true when someone gets elected as president. One thing is talk and all these things that can happen during the campaign, and after it usually we see that tone usually goes a little bit calm, and it gets calmed down. So we definitely need to wait and see, but I think in the core of his economy is that he actually wants to strengthen dollar. So at least we know about Trump plans to deport illegal Mexicans residing in the US back to Mexico. He was talking about borders. Maybe that will not be that harsh, but generally what he was implying in his politics is that he wants dollar to be strong, okay, and he doesn't want to outsource back to other countries such as Mexico and China. Actually, he wants to employ more people in US. So what I think is that just from my personal experience, I know that 90% of the time, what has been said during campaign usually changes when someone gets elected as a president. So we need to see how money flows will be handled, outside money flows, how will be actually politics to Russia, because we know that there has been a disagreement and divergence of politics between Russia and US lately. But it's not good, for the rest of the world, it's not that good that two major forces are so opposed. There should be balance, I agree, but not in the sense that it can lead to major escalation, let alone Third World War. I mean, that's of course the worst option. So what Trump was saying during the campaign, that he actually wants to strengthen ties with Russia. I mean, will it be possible? I am still not sure, because of huge diversions regarding oil, regarding Saudi Arabia, regarding Syria, and all those questions. But that's politics. Still he's a little bit conservative in his politics. And now if we watch that from strictly US point of view, he has the capability to make dollar stronger, but also to strengthen his ties with other countries. Russia, China, those are major forces in the world. I mean, there is no major question in the world that can be done without China. Russia too, but China even more important. So we will see how he will deal trade agreements. I mean, we still can make guesses, but ultimately it will be seen. From market perspective, guys, I was telling you, and I'm repeating again, now we are seeing dollar strength. And it's not surprising. Indeed, for me, really, it's not surprising that we see dollar strength.
I expected a bit more, probably a bit more dollar weakness at first, before we saw the strength. I was a bit surprised by the quickness. I would have expected it maybe few weeks later, probably.
Yeah, well, I mean, now we can talk. I would actually like to cover that in the section, in the webinar part when we talk about currencies. But yeah, I will explain.
Yeah.
Most of the currencies were actually at their supports. For example, dollar yen. We need to see why dollar yen jumped up so heavily, and I will explain that during during the technical part.
So Nenad, I think that anything else you wanted to add regarding maybe the fiscal and economic tax policies? We could talk about politics, geopolitics, international politics till now. In this part, how about the short and medium and long term, or let's say short and medium term perhaps, of these plans? It looks like maybe some economic growth, but what kind of, do you agree with that? And also what kind of problems could there arise after that?
In my opinion, the first thing is that, well, if we have a rise in inflation, we can also see interest rate hike. So, well, if we see that that Fed actually employs rate hikes, well, dollar will get additional boost. But first, we need to see, I mean, of course, the main reason for dollar strength is it's safe haven, because dollar is safe haven, and yen is actually reserve currency. It's also reserve safe haven. So because dollar is that strong, first we need to see, will Fed actually, now we had the elections, and we were very certain, we implied it so many times in our webinars, that there will be no rate hike before the elections. I mean, that would be really nonsense, a stupid thing for Fed to hike before the elections. Now elections are over. We need to deal, whatever you think, guys, about different candidates, this is now reality, so we need to deal with reality. So the thing is, if we see a rise in inflation, okay, then we might see interest rate hike, okay, and then definitely I'm sure that dollar will gain additional strength. Will it be when it happens? I mean, it's only one day of Trump's reign, so we don't know what there is a lot of, I mean, a lot of things to happen to get to a rate hike, but we can start to predict it after some month or two. So we will see how the things will develop. So yeah, about rate hikes, that is what I had in mind.
Yeah, we were thinking that we still probably, I know that some experts think that December is on the table. I still, as we said on Monday, still think that it's soon. I still think 2017 seems a bit more likely, but we will find out soon enough. Yeah.
I agree with you. I mean, I don't, at this point, I don't see December as a possible high. I mean, it's 1 month time, but it might be too early. But of course, we need to calculate all possible surprises. But I still need to see some cues. I cannot. I don't know why other analysts say they see rate hike in December. I mean, we already had elections. I don't see anything concrete despite those riots, whatever. But we need to see concrete things for possible hike. I cannot make a prediction without any clue. So first I need to see results. I need to see new employment. I need to see inflation results. And then I need to see some statements that can give me cues whether there will be inflation or not. We need to know that the structure in US has been changed. It's Republicans now, it's not Democrats. So we still need to have some cues regarding policy, future policy guidance. What will they do? I mean, it's easiest to say there will be a rate hike in December, but we still don't see anything. I mean, I personally don't see anything that can lead to a rate hike, at least at this point. Dollar is gaining strength. We see that dollar is gaining strength, but we definitely don't know whether the inflation rate will be hit that will actually give us cues for some possibly new rate hike. So we definitely need to see it. Now, guys, here I'm not sure that Chris is now with us because I think that he lost connection.
No, I'm here, but I just already passed I passed you the screen.
Okay. I thought that you might add something for rate hike, but yeah, well, I agree with you. I don't see any rate hike at this point, but I might change my personal view maybe in next couple of months. First, I need to see how things will develop.
Yes, agree.
Okay, now from technical perspective, guys, first of all, I advise you to read our article. Okay, we published a new article, and I will show you in just a second. Okay, here, this is actually our new article. You can read it here under Analytics, Traders Blog, Impact of US Elections and Trump Presidency and Forex. Okay, so I just don't want to repeat things from the article. So you need to read it, and please go ahead and read the article. And here you will find also recording of violent price movement during U.S. elections, because you probably know that both Chris and I covered U.S. elections. We were there live, and we were tweeting a lot. So here you can find recording of a violent price action, and here you will see also the analysis of dollar index. You can also see peso. You can also see gold, ruble, and oil and DAX. So a lot of things that you can read. So I don't want to repeat this. If you want to know our opinion on these equities and Forex pairs, please go there and read the article. And now I will talk about some other stuff. First of all, I will just mention dollar ruble. Guys, what I really think at this point, if Trump will deliver his promise, it was not his promise, but he was actually pointing that he would like to make stronger ties with Russia. If that happens, guys, if sanctions are lifted, and sanctions can be lifted, in my personal opinion, between next 6 and 12 months, then what I expect is dollar ruble to tank heavily. I mean, that will maybe be the major Forex move. Remember my words and mark my words now. If sanctions are lifted from Russia, if US lifts the sanctions, then what will happen? We will see a huge drop towards these trend lines. And I think personally that dollar ruble pair can drop towards 40, 30, 35, this region. At this point, it's in a huge trend. Still, watch this, guys. This is still uptrend, and this is just a retracement in heavy uptrend. But if sanctions are lifted, then this pair has the ability to drop towards 40, 35, and 30. So that will be, if it happens, my opinion is that will be the major Forex mover in next 6 or 12 months from this perspective. So I'm really carefully watching how things will develop between US and Russia. And well, if I see any cue that sanctions may be lifted, I will definitely tell you, and well, we will also publish it, and then I think that our best trade possibility would be to short dollar ruble towards 40, 45, 40, and 30. Okay, so we need to watch cues for that. So that is what I'm really focused at this point. Okay, euro dollar daily. Guys, what did I tell you yesterday? Short euro dollar. At this point, this is clear for me. This is a still downtrend in euro dollar. And if you shorted it around POC zone, you could have made huge profits. But it's not enough, of course, to give us some possibly long-term picture for euro dollar. I mean, for trading, it's great. But not all people are interested just to trade. Some people have their investments and they would like actually to see what might happen in next, we'll see midterm, okay, next couple of months. As I said, I mean, it's still uncertain what might happen, but one thing is for sure, judging from this technical picture. If we take a look at this daily chart, we can see clear downtrend, and we can see also a congestion in this pair. Now, I will talk from a perspective of possible movement, but also, guys, not just from traders' perspective, but from some analyst perspective. Okay, here we can see a trend line, guys. Okay, this is inner trend line. Okay, and this inner trend line has been broken. Now, I am paying attention to this trend line now. So this is daily chart. Don't forget that this is strong trend line because it is a year-old trend line, because the low of this candle was actually the 3rd of December. Okay, so it's almost a year. See? Now, if this trend line gets broken, I suspect that euro dollar will tank towards 1.06, 1.06 to 1.05. And still, if it breaks this lower trend line here, then it might hit 1.04. So you see here, this trend line, it's two-touch trend line, and it projects here, exactly making the next cross with S2. So from some midterm point of view, if dollar keeps gaining strength under Trump, we will see euro dollar going down. Okay, that's for sure.
And Nenad, could you show the weekly chart? Because we will see also, of course, the huge downtrend in that case. That momentum is still present and visible. Now we're in that huge consolidation that we lasted already 2 years now.
Yes, and consolidation has been broken here. Okay, this was actually a consolidation, and now we can add even more trend lines. But here, if we take a look at classic chart pattern, this is effectively a pennant, bearish pennant. But guys, I mean, weeklies, yes, it's great, but I'm scared to think about the real technical breakout just from standard price action perspective. If this is the pole of this pennant, then if we add this is huge. I mean, guys, this is watchful for this, from this to this, it's huge. Now, if we actually subtract this from this breakout, I mean, this goes below the parity, right?
Yes.
Now, I really...
It's possible. 09 indeed, 085.
Yes. Yes. But it's really, I mean, it's a little bit scary.
It's too far to think about it right now. I think first moment, indeed, think, you know, if it breaks that trend line, then 105, as you said. If it breaks 105, 104, then perhaps after that 100 parity, indeed. Agree.
Yeah, but as I say, it's really scary to me to think at this point that it will go below the parity. I mean, we still need to see how lower time frames price will develop. But judging from weekly, it has a momentum to the downside.
But it has been
And
there. It has been there in the past. We're talking about a long time ago. We have to go to the monthly probably to look at it, but look at that. They're all the way down at, what is it, 803?
yes, but that is what actually scares me. I mean, this movement will be huge. Okay, it will be huge. But if it happens again, don't forget, guys, that we had interventions here on open market. So you see here, when this, actually this was a squeeze here, and after this squeeze, we had a huge uptrend that led to 1.6. This was, in my opinion, now this is too far, but in my opinion this was the intervention. Because monthly, 3-month time, this is three white soldiers, huge bearish pattern that extended to 1.6. So that is what I mean. I wouldn't like that to happen in a close time. If it starts to grind slowly down, then okay. But definitely there are buyers here. And I'm sure that there are institutional, real money, smart money buyers here. But what is very, very wrong with this picture, I mean, if this happens to hit this level, we usually know that history repeats itself. Will there be a possibility again for the price to tank, to rally up to 1.6? I mean, this is GDC, guys. This is global GFC, global financial crisis. And this happened when US had a huge crisis. So, I mean, housing market, you remember, I don't think it will happen. So when price, if it breaks down, and if it really goes below the parity, I'm sure that these zones here will be used for traders to go long. So we need to pay attention to that. I'm sure about it, because this is huge history and multiple of orders are here. So, okay, now we are really talking long-term perspective, because this is month, guy. One candle is equals to 1 month time. So, I mean, it still has the room for a year or maybe even more to go down. So what I think is really, I'm focused now primarily on that midterm. So weekly momentum down, but also daily, what is telling me is that it wants to reach these levels here. So, well, yeah, euro dollar is bearish, and from perspective, it should be short on rallies. From intraday perspective, at this point, it's also short on rallies, but we still need to see, if you trade, of course, intraday, we need to see other major economic data release and see how it will actually behave. Because intraday, it can go both ways. But generally, euro dollar is indeed bearish. Okay, Chris, do you have something to add?
No, I think that daily candle is really huge indeed. That 2 days ago, it's such a massive wick, such a close needle low. It really doesn't leave any doubts about it. So, and then we have this weekly candle that will end up most likely bearish if tomorrow holds reasonably. That weekly candle, can we take a look at the weekly candle? A bit zoomed in. That
Sure,
could be
sure. Weekly candle.
That could be a huge thing to keep an eye on. If that one, can you zoom in on the time scale so that it becomes, we see the candle itself better? Yeah. So yeah, look at that one. Let's see how big, that's how it's actually not even that much. I thought it was bigger. The daily candle looks a bit more impressive maybe than the weekly.
Yeah, but this is, I mean, it's still a lot of pips in this candle. It's 430 pips.
Yeah.
But also what I'm thinking about this, guys, is if you remember our analysis 2 weeks ago, we actually, I was personally actually pointing to 1.08 flat. And the reason why it wasn't hit 1.08 2 weeks ago was actually the risking before the elections. So it was a de-risk before the elections. So because of that, we couldn't see 1.0. But I think at this point that this weekly candle is pointing down towards 1.08. So we still need to see where it will end up. But it seems that euro dollar is pointing really towards this support, and It's actually a psychological support too, because it stands at 1.0800. So yes, I would say that euro dollar is very, very bearish. Now pound dollar sentiment has been changed. Again, if you follow the analysis, a couple of days ago, well, I said buy around 23.80 to 24, and actually again you can see this trend line has been broken here. This is bullish N 1, 2, 3 pattern here. So I think that pound is actually aiming for, it can go to 1.28. Yes, on daily basis it's actually intra-week swing. It seems like it's pointing to 1.28. From longer term perspective, still bearish. Of course, now this is longer term perspective, because until it breaks above this candle here, this is bearish order block, and you can see here. So this zone is very important. This is high, this is low. Maybe it will try to get in this zone, and then it will actually try to stay within the zone, waiting for next signal to either go up or down. But it's actually trying to escape from this bearish bias toward neutral, mid-term, long-term, and stay within this zone. If this happens, then we need to wait for the next signal, probably about Brexit or something that might spur either upside or downside. But at this point, yeah, we can see that pound is losing, pound is actually gaining versus dollar, and that is what is very interesting. Euro dollar and pound dollar are having negative correlation at this time. Negative correlation is, I mean, if dollar is that strong, why is pound gaining strength versus dollar? Okay, so that is now the question. Shouldn't be, I mean, the whole dollar basket should go down where dollar is actually quote currency. So what it tells me is actually that pound is really strong at this point. I mean, it's much stronger than euro. Okay, it's much stronger than euro. We can see that from euro GBP. Okay, watch this. Euro is really falling now heavily. These two daily candles are strong here, and actually on pound dollar you can see that it's gaining strength. And this daily candle is momentum candle. It really has the possibility to go towards 1.28 again. But until it breaks this order block here, 1.35, longer term is still bearish, guys. Okay, we can do nothing about it. I mean, longer term is still bearish, and we need to accept it. Okay, we need to accept it. Okay, so pound dollar, do you have anything to add, Chris, referring pound dollar?
Not really. I'm still, generally speaking, long-term indeed bearish, as you said, because of, well, the structure, the long-term trend. I think one more, I mean, from a wave perspective, I'm still counting on one more lower low on the pound. And I think that if I remember, I don't remember the level by a heart, unfortunately. But yeah, the R1, I would definitely not expect that more with those bottoms than the R1, the moving average, indeed, and those bottoms. So I agree with you. There could be still some retracement upside, but I think it should run a resistance and turn for one more lower low.
Yeah, definitely. Yeah, definitely. I mean, we are talking now from some intraday, intra-week perspective. Of course, longer-term perspective is bearish. I mean, we don't need to open weekly chart for this. It's easily seen on daily chart. This is the zone that is neutral. This is bearish zone. This is bullish zone. This is very clear to me. So this zone is bullish for pound dollar. This zone is neutral.
Are you drawing something on your chart at the moment?
Yeah. Okay, I didn't. Okay, here, guys. Okay, yeah. So I will zoom in. So very clear on daily chart, everything is seen. Here, this is bearish zone.
Yeah.
Now this is neutral zone, and this is bullish zone.
Yes.
So
indeed.
pound dollar will get real strength after 1.3550 is broken to the upside. Here, this is still bearish, but if it gets into this quadrant here, it will be neutral again, and we need to wait for the next signal. That can be a range play for pound dollar. Okay, this region here could be a range play, and this region is not that, I mean, it's several hundred pips, so there will be trading both ways once pound dollar gets towards this region. But once it's breaks here, it will be bullish. So we still need to see whether it will reject from this region, will it stay here in this bearish zone, or it will move to neutral zone here. So this is 100% neutral zone for me, this one. Because guys, this is rectangle consolidation here. See, bearish breakout, bullish move, and possible another rectangle consolidation. So pound, clear with pound. It's currently in uptrend. Weekly, from intra-week swing perspective, it's also uptrend. From longer term perspective, it's bearish. Zones are clear here. This trend line has been broken on daily, so it should conclude, it should actually proceed with this bullish scenario towards 1.28. And then we will actually reassess the analysis. But at this point, it looks really bullish at this point. I mean, we can also expect maybe some new news, some new things about Brexit. It can change the sentiment because I think that they will get an appeal in December, so we need to wait. But until this level is broken, pound dollar will be either bearish or neutral. Now this is midterm to long-term perspective. From intraday perspective is different. Now we are not talking about intraday perspective. Dollar yen. Okay, dollar yen. Well guys, as I said, dollar yen could have been bought around 102.50. That was what Chris and I told you in our pre-analysis webinar, pre-election webinar. 102.50 was the zone to buy into. What happened? It went a little bit more to the downside, but from daily time frame, it's not that much because it went only 140 pips below it. It's not that much. We have a strong trend line here, and then actually it went bullish. So from that bounce from 102.50 at this point was more than 450 pip bounce on daily chart. So, well, we can easily see that dollar is regaining strength, and I mean, it's still, for me, it's a bit also clear because if you look at technical perspective, this is where buyers were. This is really where buyers were. And dollar is a safe haven, and now people are definitely looking to buy dollar and short yen, and it actually helps yen because Bank of Japan stated many times that they don't want a strong currency. Maybe there was some intervention in the market from BOJ that we are not aware of, okay? So we don't know yet if there was some sort of intervention. Maybe there was, because BOJ was saying that they're ready to intervene if they have to, but at this point, definitely it helps Japan because they don't like yen to be that strong, okay? So definitely dollar is gaining strength. It has more scope to go up, okay? And if it gets to R2, we have an X cross here, okay? Clear X cross at R2, 1.8.15. If it gets here, guys, and goes above it on daily time frame, there will be a scope for 300 pip movement towards 110. So I want to see reaction here, and I think the dollar will keep gaining strength until this level has been hit, around 108. And then if it proceeds down, up, you see here R2, this is monthly pivot points. Above these guys, there is huge gap for dollar, even 119, 120. I mean, we need to watch now daily chart too because it's very clear. Resistance here, support, EMA 89, exactly at pivot point, inner trend line has been broken. For me, this is very clear. Dollar yen is buy on dips. So dollar yen is buy on dip scenario, and at this point it's showing, it's really showing signs of real strength. Okay, so dollar yen, I'm not sure how many of you guys are trading dollar yen, but it's very good pair to trade, especially because you can also trade it during Asia session, and it moves heavily also during New York, and it moves in London market, so it's suitable for 3 different sessions. And longer term perspective, still bullish, guys. Watch weekly, guys. This is bullish. 1, 2, 3, 4, 5, 6, almost 7 touches. Unless on weekly this level has been broken to the downside, dollar is longer term in uptrend. So longer term, this is uptrend, guys. Definitely uptrend. Watch this. This is, I mean, what would you say if you saw this on 15-minute time frame? You would say, Nenad and Chris, I would buy this into dips. Yes, true, because on 15-minute time frame, this is bullish. Guys, on weekly, this is long term. This is bullish. Daily time frame, bullish. 4-hour time frame, bullish. Guys, we need to see 4-hour time frame retracement to buy into dips. You don't want to buy that high. For mid-term traders, you want to see 4-hour dip. Okay, this could be, this is actually bullish order block here. We can put it here. So this is bullish order block, and if we see a retracement, pay attention to this level here. Okay, 105.46 on 4-hour. If it breaks down, then definitely watch for this zone around pivot point EMA 89. Here, dip towards this zone. But for some, I mean, mid to short term perspective, pay attention to a dip if it happens. Daily strong, pointing up, weekly also, guys. So I think dollar is gaining real strength at this point. And we still need to see what will happen in US and what will be politics of Fed, of future monetary guidance. What will Trump do referring dollar strength? But technical charts are suggesting up move. I mean, who knows? Maybe Trump said to his fund managers, buy dollar. I mean, we don't know, guys, what really is happening behind the curtain. But definitely, dollar is strong. This is Adam and Adam pattern here. It looks like W, but because of these legs, it's actually Adam and Adam. So it gains even, because Adam and Adam is more bullish than W. So it's even more strength. It's adding more strength to dollar. This previous order block was also broken. So it's clear to me that this is very strong uptrend. And the dollar yen should be bought on dips. Okay? Chris, do you have anything to add referring dollar yen?
Not really. I totally agree with you on the bullishness, actually. So, yeah, no, I see the same. I think it has a good space to the upside.
Yeah, definitely. I mean, huge space to the upside because, as I say, if we saw this on 15-minute time frame, this would be like 100 maybe pips. But guys, on weekly time frame, it's rejecting from this trend line. It's broken through an order block. It aims for these levels. If this is broken, it has more than 1,200 pips scope to go up. History might repeat, guys, because from this spot in the history, dollar went to 123.24. So we need to see if this will happen. But this is why we use trend lines and pivot points. Very, very bullish dollar yen action now. So for other analysis, we covered DAX, WTI, we covered the dollar ruble, peso. Please go and read our article. If you have any questions, guys, don't hesitate to ask us. But as we say at this point, how it looks dollar is really gaining some real strength, and as just the pound dollar is not from major pairs. Pound dollar is not that clear, but I mean it's going up because of pound strength, not because of dollar strength. This is pound, and watch this, pound yen, guys. Watch weekly. It dropped heavily. Now it has been bought heavily. Daily chart suggesting buying too. We also can add a trend line here. Okay, see here. So it's still going up now. It's at resistance. But if the resistance is broken, it will have the scope for more upside even towards previous order block here. And this will be bullish for equities also. So stock market will also go up. Okay. So yeah, I don't see any questions. So I assume that everything is clear. Watch further analysis, guys.
There was a question.
I would trade dollar Mexican peso if I were you also. Read our article to see.
Nenad, there was a question from, let's see, a comment from Jack that changing the U.S. tax code will be probably one of the first major priorities. And Prabhakar was asking if dollar goes ahead strong and strong, it's not good for the U.S. and U.S. market. Yes, that's true. If the dollar gets too strong, that would be bad for exports, although the U.S. does import more, so that could make things cheaper. But that's true, and probably that's why also we wouldn't be surprised to see that bounce back to the upside. I think that eventually, you see that normalization, you see that relief rally or the dead cat bounce or return to average, move back to the mean, this kind of stuff. That does happen eventually. So that's also one of the reasons why. And another question, let's see, are you saying pound dollar is a buy? It's due to FTSE 100 stocks are running into negative. I don't know why it's a, technically I thought it was going up. Why fundamentally it's going up? I don't know. Do you have any opinion?
Well,
you want to share something on that?
Yeah, but because pound was definitely oversold. And now at this point, the fears of market fears are shifting towards development in US. And don't forget that we already had Brexit. And what has been done with Brexit, it's done, guys. And also there were UK court ruled out Brexit. And that actually gave a new momentum in pound.
Ah, yes, that's true.
Yeah, but you should not forget that fundamentally it was the court which ruled out Brexit. So I mean, guys, now primary fears are not, I mean, it's not about Europe now. Now they're shifting towards US. And this is a good question. This goes, it's double top indeed. But what I would say here, if you follow high volatility trading, if this starts to retrace, then watch for possible move to the upside. I would definitely watch for this. It's close to pivot point 50, $97.57 index. But if it breaks this trend line, it's clear trend line. You need to watch this. This is 4-touch trend line. But let's call it 3-touch because these 2 touches are very strong. And watch this 3-touch trend line. It's strong, guys. If it breaks, then I mean dollar index will get even stronger, and that will push dollar yen to the upside. It will push it up. And don't forget that we are talking about safe haven flows. Dollar is safe haven, guys, and it will not lose the status of safe haven anytime soon. You need to know that US is the leading economy. China is following. China is a giant. But, I mean, Chinese keep their money in Federal Reserve, their dollars. And dollar is the king of the currency. Don't forget it. So whenever something bad is happening or investors think that something bad might happen, they flee into dollars. And it's also positive for Japanese economy, because when yen is losing strength, it's positive to their exports. Don't forget about it. Okay? So for that, ready for your question, I would take a closer look at daily. And if it starts to retrace from tomorrow maybe, then look to buy dollar index. But if it breaks this trend line, it should go here directly to 99.50, 100 resistance. Okay? And FTSE, let's see, you're also asking, but okay, you can watch FTSE. I mean, watch this. FTSE is congestion here. So it will be either up or down. But I'm not too concerned about FTSE. It's going negative at this point, but I'm not concerned for it. I would definitely pay, if I were you, of course, I would definitely pay more attention to dollar index. Because it tells us a lot. It tells us a lot. This is enough for me to judge that it's very strong and it's close to resistance. But have in mind that 3-touch trend line is strong. But what it means, if it breaks, the move can be even stronger. So pay attention to that. And watch how dollar index, actually this is a fake move. This is the real candle. This is just stop grabber. This is not real, this is stop grabber. So this is level to go for a buy trade if it starts to retrace. Okay? And yes, about pound dollar already, I was already telling you it's bullish. On technical chart, it's also bullish. It's aiming for 28 possibly. So yeah, at this point, it's buy on dips until something major is released. Like, I don't know, a new wave of Brexit talk or something. But at this point, if there were no news about Brexit referring pound, then it's buy on dips at this point. Chris, I think this is the question for you, maybe. Yeah, just a comment from Jack. Jack is saying changing the US tax code will probably be, yeah, maybe that will be his first step because, I mean, he was really bragging about it. He was talking about it heavily during his campaign. So probably, yes, Jack, you're right. Changing the US tax code, yeah. I can agree with you, yeah. And Chris, this might be the question for you. There might be impulse ABCD pattern up. This is more like a wave, right? So, Chris, you might want to answer that.
I agree. It looks like a zigzag upwards. I fully agree with that. Definitely. You can check out the wave analysis on animalmarkets.com. Click on analytics and then wave analysis, and you will see the exact details of what I expect regarding ABCs and patterns.
Okay, so I covered most of it. I'm very interested to see further development in US because things are definitely changed, and I want to see how he handle his outside politics. Actually, how he will handle. I really want to see how he will handle things with Russia and China, and whether it will be for market. But one thing is for sure, guys. Now this is good time for trade, and this is great time to trade because we finally have good volatility, and I'm very happy with markets for last couple of days. Very happy, guys. I know a lot of traders really who made money on these movements because this was, I mean, we gave you the analysis, and if you followed it, you could have made a lot of tips. I would not say money because, I mean, if you make 100 pips on $1,000, 100 pips on $100,000 account, it's not the same referring money. But at least it will give you confidence in trading. Because when you have good trend, it's much easier to trade intraday. And that is for sure. So this is now good time to trade actually. And we traders don't care where the price will go up or down. We are there to trade it. We trade what we see. Okay, so from traders' perspective, enjoy the markets at this point. So thank you guys for your comments, for your questions. We will be with you soon again. We wish you a great trading day tomorrow. Be ready for some maybe profit taking, but course, next week, expect a new wave of webinars and analysis. Thank you, everyone, and cheers.
Cheers, everyone. Have a great trading.